Hi and welcome back. Today we will cover another company from the auto ancillary sector after we covered Sriram Pistons a few months back. Racl geartech manufactures gears and shafts for industrial and automotive applications. The company has been a multi-bagger from 2020 to 2023. The company has more than 900 SKUs and 22 main customers, and the domestic customers include TVS, Kawasaki, Yamaha, Piaggio, etc. in the two-wheeler segment. And in the agriculture segment, the company has Escorts, Kubota, and SDF as its major customers. The export customers include major automobile companies like BMW, Porsche, ZF, Kubota, BRP, and MAN Industries. And industrial customers include Schneider, GE, etc. Before we go into the details of why we feel the company is interesting, we will have a quick look at the company's history. The company was incorporated in 1983 and later in 2001 was referred to board for industrial and financial reconstruction due to financial difficulties, post restructuring, and with a new management team under the leadership of Mr. Gurshan Singh, who was previously the plant head at RACL. They came out of BFAR Purfuer in November 2007. In 2004, RACL received its first export order from Kubota. They started with supply of 2 parts. Today, they are supplying more than 110 parts to their plants in Japan, Thailand, and USA. In order to promote industries in the state of Uttar Pradesh, the Uttar Pradesh Industrial and Investment Corporation has made significant investments in the company and is a promoter holding 8.51% stake in the company as of September 2025. The company's products include transmission gears and shafts, precision machine parts, chassis, industrial gears, drivetrains, park lock assembly, and wheel axle assembly. In the company's motorcycle platform, it has products like transmission assembly, shifting drums, steering components, etc. In the ATV segment, it has components like propeller shaft assembly, turbocharger components, and transmission gears. It caters to the whole automotive segment, including two-wheelers, commercial vehicles, tractors, three-wheelers, electric vehicles, passenger cars, and industrial equipments. Currently, two-wheelers contribute to 39% of the company's sales. Since 2023, the company has been facing challenges with high debt and slowdown in its major customers. The company's borrowings increased from 165 crores in 2022 to 306 crores in 2025. Today we will analyze the company's various aspects like history, financials, products, and projects. As of March 2025, the company's long-term debt was 85 crores and short-term borrowings was 209 crores. Meanwhile, the fixed assets of the company has increased from 178 crores in 2022 to 323 crores in 2025. The company's sales increased from 359 crores in 2023 to 415 crores in 2025. The higher debt means higher interest outgo, which increased from 12 crores in 2022 to 30 crores in 2025. Net profit is almost stagnant due to higher interest and depreciation. This was a point of pain for the company in the last few years. Sales data shows 2025 basically stayed the same as 2024. The slowdown in exports is the primary reason for the company's poor performance. If you look at the company's sales, in the financial year 2025, 68% of its sales comes from exports, which was 73% in 2024. Of this, 56% of the sales comes from exports to Europe. So, Europe is the biggest market for RACL. So the biggest challenge the company faced was lackluster demand and slowdown in automotive industry in Europe. Europe has been facing tough competition from China, especially on the electric vehicle side. The EV adoption in Europe was much slower than expected, leading to inventory buildup with RACL. The political and economic condition was also not favorable. China has surpassed Germany in light vehicle exports in 2022 for the first time. Rising energy costs, inflation, and geopolitical tensions significantly affected economic activity in Europe. Porsche in its 2024 annual report cites geopolitical tensions and protectionist tendencies and slow ramp-up of electromobility as the major challenges it faced. For BMW, it was recalls, market weakness in China, and subdued demand for electric vehicles. CF has explained the market situation in Europe in the best way possible. Rising costs, geopolitical uncertainties, and volatile market developments in both passenger and commercial segment. Add to this the significantly lower ramp-up of electric mobility. As a result, product launches are delayed or manufacturers change their strategy or order fewer electric platforms than originally planned, which led to overcapacity for us. Another reason for RSL's misfortunes is the insolvency of KTM, which was one of its major customers. KTM had significant liquidity issues and went into administration in November 2024. Underutilization of its bicycle facility is another reason. The company has been investing in this segment in the last couple of years, but the plant remains underutilized as the business is set to pick up. So, what is changing for RACL now? Why is it interesting? The first major change is the reducing interest cost. In April 2025, the company decided to raise 79.99 crores through issue of preferential shares to certain institutional investors at a price of Rs 795 per share. The investors included Malabar India Fund, India Account Fund, Ashok India Equity Fund, and Dr. Anindya Malpani, who was an existing investor. Malabar India further increased its stake by purchasing some more shares from UP Industrial and Investment Corporation. As per the company, the proceeds will be utilized to reduce short-term and long-term debt and for any reasonable capex investments in the next few years. The reducing debt should lower interest cost. As you can see from the quarterly results, the interest costs have already started to come down in second quarter of financial year 2026. Secondly, the company has two major projects, Titan and Venus, expecting mass production to start in August 2026. Project Titan is for the supply of parking lock mechanism for an electric sports car, and Venus is for the supply of drivetrain parts. These are to be supplied to BMW, and the company is a tier 1 supplier in these two projects. The third reason is the company's domestic order wins. Due to the headwinds faced by the company in the export segment, RSCL was looking at adding clients in the domestic segment. The company has received a nomination for transmission parts of a gearbox assembly. This business comes from one of the largest premium two-wheeler manufacturers in the country. As per the company disclosures, it should be a high volume business. The project will be executed from its Noida plant from January 2026. The fourth reason is KTM's revival. As KTM was a significant customer, its revival should be positive for the company. Bajaj Auto injected 800 million euros into KTM's parent, Pierer Mobility, in May 2024 and has taken full control. This should ensure continued production of KTM's delayed models. The company has received a nomination for shift drum for ATVs made by BRP Canada, one of the world's largest ATV manufacturer. Mass production of this project is expected to commence in the year 2026. The company has also won a nomination from SEBI Rene for supply of critical components for electric power steering tailored to the requirements of an American passenger car OEM for their pickup truck platform. The prototypes will be manufactured and offered for assembly in second quarter of 2025-26. Mass production is expected only in financial year 2027. The company is a small player in the automobile industry, but they are still able to win commercial contracts from world-renowned auto manufacturers. The company talks a lot about being a technology supplier than a component supplier. The company always have maintained that the quality of their products is one of their major advantages. The company has mentioned that their average rejection for the last 7 years have been less than 20 parts per million. Some of the customers even allow a rejection up to 100 parts per million. BMW in 2024 had to initiate a recall of 1.5 million vehicles due to a faulty braking system, severely affecting company's expenses. These extend beyond just financial implication, and the issue was traced to Continental AG's plant in Hungary. Due to this very reason, there are very high entry barriers for a new vendor to win business from auto majors. The nomination the company wins from global majors usually have a long gestation period, as they have to develop the product for the particular model or platform, and the product has to go through multiple validations. Usually, They start with small orders from major international players and increase their wallet share as they are convinced with their quality. Being a tier 1 supplier to auto giants like BMW and Porsche will be a great advantage for the company when submitting business proposals to new customers. Let's have a look at the major risks associated with this business. The major risks are capex intensive nature of company's business along with its very high working capital requirement. The company's projects has a long gestation time. In February 2024, the company received a Tier 1 supplier nomination for supply for a parking lock mechanism for BMW. The Tier 1 status brings greater credibility to the company's technical capacity. The entire supply will be manufactured by the company and will be supplied directly to BMW. However, this mass production of this product is expected to start in August 2026, after almost 2.5 years since the received nomination. The company primarily caters to the premium segment. The company produces niche, low volume products. So even though the margins are much better in comparison, product manufacturing is done in small batches, resulting in lower capex turns. In order for the company to grow, it will have to continuously invest in new capacities for each new project, which could be a strain on the company's cash flow. One of the major concerns regarding the company is its long working capital cycle. The conversion cycle has been more than a year in financial year 2025. The high conversion cycle is because of the very high inventory days. This could be because the company does batch production of low volume products and sending it to customers as and when they request it. There was also a lot of inventory buildup for one of their key customers, KTM, who went into insolvency proceedings. Racl also has taken a warehouse to cater to the customers' requirements in Austria. Due to the very same reason that the company has a very high conversion cycle, it has very high short-term borrowings as well. Slower EV adoption in Europe is another risk to the demand of Racl CV products. Due to the delayed ramp-up of electromobility, Porsche is postponing the launch of certain electric vehicles as per their Q3 earnings report. Development of new electric vehicle platform is rescheduled as well. 2026 could be a turnaround year for Racl after a few years of investment in capacities and products. Some of its projects like Titan, Venus, etc. are expected to start production next year. With the recently concluded preferential offering, the interest expenses of the company would also go down. The focus on domestic business and the recently won order may help the company in reducing receivable days and improving asset turns. For anyone wanting to know more about the company, the conference call transcripts would be a good place to start. The conference call is refreshing to listen, with the MD explaining a lot about technologies rather than just numbers. One of the perks of having an engineer and a previous plant head as MD. In the first quarter conference call, the company elaborately explains technologies like ERC and AKC. The company always maintained they win lower volume orders from new customers in the beginning. The company has been able to win nominations from many automakers in the last few years, and a scale up of this business from these customers can be expected in the future. One of the exciting additions is CF, which they landed in 2021. It's great to see company adding exciting capabilities in electromobility. Due to increasing energy costs, inflation, and geopolitical tensions, many European majors are considering increasing production and sourcing from countries like India. Any trade deal with the European Union will be a positive for auto ancillaries like Racl. The key concerns are the elongated working capital cycles and capital intensive nature of operations.